have a lot to talk about. Until, by the way, I want to make this clear, until the president said he was going to jump the tariffs double for steel and for aluminum, the market was going to rally. And today's a pivotal day. I don't know if he destroyed the rally. There has to be something that said within the next hour or two from Carney saying, listen, we want to talk, because he will shut down the auto industry. Where most of our imports do come from Canada for both steel and aluminum. These are the most significant tariffs that he's mentioned. So with
it's tariff rhetoric moving in the wrong direction, right? The market wants to see some type of resolution. They want to at least maybe see some of these measures put on and no change over a period of time, but it's still very much in flux, and that's creating uncertainty, and that's why you saw the drop in the market.
Well, Trump's creating recession for Canada right now, because the Canadian oil, very important. Canadian aluminum, steel, very, very important. He does wood next, and the housing industry goes. Our housing industry, because that means the gross margins go down very quickly. I do say that NASDAQ has to lead us. I'm not as interested in, I mean, you buy Nucor if you think this is real, but I think a lot of people are going to say, wait a second, how can I buy Nucor into recession? But Nucor is the biggest winner here for people wanting to be involved.
That's the debate.
I don't trust the aluminum stocks, but I'm giving you Nucor. It's good. You can. Alcoa is a very convoluted company. You got to be very careful if you buy that. The discretionary stocks, we're hoping for a bounce there, but we did have a couple of airlines say negative things. You want to, right here, you want to watch Delta and United, because United did not pre-announce. But it is tech, and the best quarter in tech was Broadcom. As we know from Thursday, if we were able to buy, I would buy Broadcom. It's down 18% for the year. But in general, what I'm seeing is, because we're minus 4.9 on the oscillator, tomorrow will come in most likely. I don't like to anticipate that, but come in tomorrow and find ourselves very oversold, and you have to buy that oversold. Again, don't want to jump the gun, but this is, remember, Broadcom had the single best quarter.
So it's a counter trend day, right? We're seeing recoveries in Broadcom. CrowdStrike is another big gainer today. And on the other side, we're seeing declines in stocks. We've been saying, don't chase these rallies, instead take advantage of them. We trimmed Abbott Labs again yesterday, took off 75 shares. So healthcare is a little bit weaker. We trimmed Bristol Myers last week. And we took off some Lindy as well, first time in a long time. It's had a nice recovery. It's held on to its gains, very defensive, very resilient business. And now
by the way, it's painful to take off some of that Bristol, but it was the right thing to do. Lindy is just one of the situations we declare victory on some, and we put money into COF, which I really like here. It's a very counter-trend position.
Buying more Capital One, just been nibbling each day. Well, today you actually got an upgrade over at Baird. They raised their rating to outperform. Price target goes to 200. They're believers in the long-term synergies, says it's not reflected in the stock price of the Discover deal. They say the recent weakness has resulted in an opportunity to buy a business that should be one of the most profitable, risk-adjusted returns and credit-sensitive financials over the next several years.
And my reason what I was drawn to it was because it's switching from being a bank to being a fintech, in that they are able to take all the fees they pay MasterCard and Visa and run it through their own system. And I don't think people realize that this is a coloration change. Now, and again, like I want to say that that if we had not gotten the president, who I remember, I'm telling you, he's manufacturing a recession here. The president had just waited a few days, but he couldn't, because Carney thumbed his nose at the president. The Carney came in way too hot, and the inability to bottom here is directly put at the feet of the president. It's tough.
At the same time, so there are some green shoots, whether it's Capital One today also got an upgrade of GE Healthcare.
Yes.
Upgraded to buy from neutral over at Goldman Sachs.
Let's be careful there, because I think that this is another repositioned name. We have a very big gain in GE Healthcare. We could use this upgrade to sell some and reposition the things that are down too much, because that's what I'm trying to do. Trying to circle the wagons around the best of the ones that are down and take the ones that are overinflated because of a thin market, hence Abbott Labs, and now this, and put it in the stocks that I think better represent opportunity.
Yeah. So, I mean, we've been buying the banks. We talked about Capital One, nibbled more on Goldman Sachs yesterday.
That's right.
We upgraded Wells on Friday. Maybe that could be one.
I think Wells is very right to buy.
We're just looking around.
Again, remember, these are all down because of the fomented, I think it's a better word than manufactured, the fomented recession By the way, I'm not against buying Oracle here. I know that we've had a checkered history with Oracle, so I don't want to go back to it. I want to make it very clear to people. This is not a time, I mean, I said it last night on the show and this morning, I want to be constructive. I want to buy things here, not sell. We don't,
sell
with the
into
possible
strength.
exception
selling
of
into
strength.
strength.
I mean, like, Abbott was like, if we didn't sell, that would be nuts. And GE Healthcare is not a stock that I like, and we have a good chance to go up. And then we can reposition, because we're not anxious to put much of our cash position to work. But we do probably want to position, say 1% of it, put that to work if we have opportunities. We can't just throw money if we have no opportunities.
No, absolutely. But as the oscillator gets more oversold, I mean, we've been saying we'd love to see like a -7 figure
That's
to really
what we
step
really
in more.
see.
But instead, it's kind of been, we got oversold, then it came out of it Friday, back to it yesterday. Barely actually moved, even though it was a 2.7% decline in the S&P, a 4% drop in the NASDAQ.
But there's absolutely nothing wrong with being down 1% right now for the S&P, given the fact that the president took direct action that is going to make it so our cars cost much more, because we import a huge number of cars from Canada. So it was, again, hot-headed. That's been my experience now, mercurial and hot-headed. I don't mind criticizing a president of the United States. We're a great country, and I'm not criticizing our country.
Yeah, I mean, look, the potential for higher prices, too. We're going to see CPI, I think, tomorrow. So, I mean, that obviously important for the inflation picture, because with the way things are going, what the Fed has to say, what the Fed says, is going to be even more important. Going
and
forward.
I mean, if we were a small importer of aluminum or steel, I wouldn't care. We're a huge importer. Steel not that important to the economy, but it's very important to the auto industry. The auto industry is going to have to eat, and we got Phil LeBeau. Auto industry is going to have to eat these tariffs, and that's not good. I think that it's one of the reasons why we see the 4 and 5 multiples for GM and Ford. It's because this is happening. It's going to make it so their cars are not competitive. Tesla, I think, can rally. We heard from Ron Barron this morning. He just comes on to be able to get the stock going, and I get that. We want to watch. We don't want to be buying the Oklos, the Rigettis, the Quantums. There are so many high-quality companies whose stocks are down. That's what we should be focusing on, and I have no problem with doing that. I want you to watch that we're putting money to work. Watch that we're declaring victory in some things to go into others that are too low.
Why don't we hit some other big headlines of the day? You mentioned Oracle. Quarter was a little light, but really strong bookings for the Oracle Cloud infrastructure.
That the stock is down this much, but look, we're going to have sell programs directly related to the tariffs. That's what happens. Dick's
Sporting Goods, a good quarter, but their comparable sales forecast for the year comes in soft, a little bit below expectations.
It was up to 209. It's back to 201. I think that's looking in at the wrong prism. But people now are panicked about the consumer.
Sure, and Kohl's probably doesn't help, but Kohl's has been heading this way for a long time. They cut the dividend, gives a bad forecast for the year.
Yeah, no, I want to emphasize that I never want to wish ill will to any company, but this is the company that in recessions, the weaker companies can't make it. And I don't want to say that let's just say the recession without fingering any particular.
Yeah, sure. And I would even say, more Kohl's that close, the better for TJX.
Yes.
Right? Even though TJX at this point probably is better merchandise.
We should be buying TJX today, and I think we have to look at TJX to see if we shouldn't be buying, given the fact that Macy's is closing stores furiously. This company has to start closing stores. And by the way, Walgreens is still closing stores. I mean, we have a real opportunity here to buy some that's a great thing to buy. And it's a great stock to buy. We should leave here and buy some TJX.
And then it's the airlines. Delta lowers its Q1 revenue and profit outlook due to weaker domestic demand. United Airlines says they're seeing weakness too. Q1 EPS in the lower end of the range. Southwest bucking the trend. They do lower their revenue forecast, but talking about an accelerated buyback, cost cutting. They're going to begin charging check bags, which is
very good,
new for them.
Yeah, I would point out again, these are the kinds of stocks where you need to see a bottom. And it's very hard to get them to the bottom because this is the one bull market left, which is travel. Yeah. Very serious. Boy, I'm watching the Cumminses of the world, the PACCARs. These are steel.
Big machinery.
Yeah, big machinery. That's why it was ill-advised that double, ill-advised. And did we hit everything we need in our lightning round?
I think
we have to go to work, and we have to do some trades. I want everyone to stay tuned. Don't forget Thursday. Mine's in flux because of what the president's doing. We're obviously going to address Mag 7. Going to address what I think about what's left, I'll give you the skinny on these. I may not be able to cover every stock because we have initiations that you're going to be covering.
Yeah, we'll talk Capital One.
Right. Capital One's
been hitting it every day for the last few days.
Remember, Capital One is a very confusing situation that we're taking advantage of. I've known Richard Fairbanks as CEO for decades. Now, here's the problem with Capital One. The deal hasn't closed.
Sure. Waiting for the Fed, waiting for the OCC.
Right. And when it closes, numbers are going to go up huge, and the analysts are going to get all behind it because they're going to say, hey, we got a company that is no longer just a bank. And that's what we need to see. As Jim Cramer, Jeff